Hi everyone, hope you're all doing well. Today we're going to do an update on my third largest UK holding, which is Hollywood Bowl, and we're going to talk about this stock because it brought out its interim results, which were unbelievably good, and also announced a major acquisition, and we're going to be talking about that and what it means for the company. And towards the end of the video, I'll kind of give my updated thoughts about this stock and my opinion and my plans going forward with this one. So yeah, Hollywood Bowl, ticker symbol BOL. I've owned this stock for around about 2 years now. It's in my opinion, a fantastic company, a company that I've said previously multiple times that really this could potentially be my biggest UK holding. It's fantastic. It's profitable. The revenue growth's really good on it. The expansion plans are good. It's now gone back to paying dividend, which we'll talk about. It's absolutely fantastic. And especially when you look at the share price now, the business is performing so well. I mean, it is doing well. It's holding up a fair bit, in this kind of bear market, this stock market crash that we're going on. Without doubt, we've seen stocks drop, 50%. So considering that it's still near its 1 year high, it's still pretty impressive. I'm still up 40% on this position, which is still not bad going, considering that we are in a bit of a negative market here. Maybe if it wasn't for a negative market, it could be slightly higher. However, I've got to say, it's still around £2.44, and considering that it did peak out around January time near the above the £3 range, I do think now, when you look at the financial performance of this business, it's now well ahead of where it was pre-CV situation, and that's not really being reflected on the share price. I, without doubt, think that Hollywood Bowl should be now pushing above the £3 range, and then when you look at the expansion plans that the company has going forward, it's really good. So we're going to be doing a bit of an update into Hollywood Bowl. Just to let you know, if you are on Patreon, we dropped a live Q&A session on there last night, so if you are on there, the replay is up for you guys to go watch. It's around about 40 minutes long. If you do want to join the Patreon, link is in the description. There's 2 exclusive videos a week on there as well. Also, my live buy and sell alerts when I'm buying and selling companies. But yeah, Hollywood Bowl. So let's just take a look at some of the news. So we'll start off with the financials very quickly. So revenue compared to the half one of 2019, so this is even, this isn't going on 2020 on really easy comps. This is where the business was pre-CV situation. You can see here the revenue is now up 36%, which is very good. So the revenue is a lot higher than where it was previously. If you look at the group profit after tax, same again, that's up 52% year on year on 2019 comps, which is fantastic. And if you look at the dividend, the interim ordinary dividend as well is 32% higher than 2019 levels. So yeah, I mean, you look from this point of view, the revenue growth is well higher than where it was pre-CV. Profit mass amounts, they've done that by introducing the pins on strings, which has improved the gross margin slightly, and also people are spending more money when they're actually at the venues as well. Maybe that's come from a lot of the reinvestment in the new revamping locations. That has helped massively. And also, we talk about a stock that pays a dividend as well, which is fantastic. So the financial numbers were really good, and when you look at the performance here, like I said, we're going to see us financially a lot higher than where we were pre-CV situation when we get a full year here, which is going to be absolutely fantastic. Really good amounts of profit. It's making that good amounts of profit, actually, to be fair, that when you do look at the balance sheet is getting very strong now. Debt to equity is very good. It used to have a bit of debt on there. It currently does not have any debt on there now, which is fantastic. And when you look at the ownership of the business, the great thing as well is what's happening more and more is there's just insiders like buying up the company as well, which is great. It's always a really positive sign in the business. But the really standout point about Hollywood Bowl, a recent update, is they actually did announce a acquisition. It really surprised me. But like I said, when you're a company like Hollywood Bowl that is now, creating, 30 million a year, which, by the way, if we look on a P ratio basis, that's going to put the company at very good valuations. You're going to be talking about 13, 14 times earnings for a company that's doing these sort of numbers with a dividend. It's a very good valuation. But when we actually take a dive into the acquisition, because they're generating good amounts of profit and all that profit's kind of sitting on the balance sheet, well, they are starting to pay some of it out on a dividend basis now, but because it has such a strong balance sheet, it can go make a lot of these acquisitions now. And it did go buy a company. It bought Teaquinn Holdings, which is a Canadian-based bowling business, and it bought it for approximately 10 million, which is a pretty decent price, I think, for what they paid for it. It was around about 1 to 2 times sales. On a profit basis, well, it wasn't too bad. So I think they paid a pretty decent price for it, really. So pretty good acquisition by the looks of it. But yeah, it's a Canadian-based bowling business, so the big standout announcement here is that Hollywood Bowl is no longer just going to be the largest UK 10-pin bowling centre. It's now actually going to go international, which is crazy. To think Hollywood Bowl is now going to attempt to go an international company by expanding into Canada. Clearly, it's identified Canada as a very good market it can take market share on. It says Teaquinn comprises of Splitsville, an operator of 10-pin bowling centres, and Striker Bowl Solutions, a B2B supplier and installer of bowling equipment. So that's interesting. Obviously, we know it looks like they're obviously more interested in acquiring the bowling alleys, but the actual B2B supplier, I wonder if this is potentially, I don't know, they potentially might sell that off to someone else. Potentially they are going to keep that and they actually become a supplier of equipment. Maybe if they're a supplier of equipment as well, potentially we see improved gross margins. If they're buying all their equipment from a supplier that they own, obviously that could help gross margins. So I'm quite interested to see what they do with that B2B part of the platform. Is that going to be sold off? Are they going to still use it? If they still use it, is that going to increase profit, revenue? Is that going to improve gross margins? So that's a really interesting part of the business to keep an eye on. But obviously the main part they're going for is these 10-pin bowling centres. Splitsville is a well-operated business with a high-quality management team and a long track record of performance, operating five locations, entertainment centres each with 10-pin bowling lanes, dining, bar and amusement offers, which is obviously key because what does Hollywood Bowl do so well? It's not just a bowling centre. You've got you can go for food, you can have drinks there, you can go to the amusements there, and obviously the main bowling alley. So it's got all the split income that other locations have already in the UK, which is obviously stands out as being fantastic. Pre-CV, Splitsville operated 4 bowling centres with CAD 12.3 million revenue and CAD Canadian dollar 2.7 million EBITDA on a pre-IFRS 16 basis. A 5th centre, so they did have 4 locations, but they did acquire 1 last year. The 5th centre that they have was acquired in 2021. The group believes there is significant opportunity to add value to the existing Splitsville business, and in a highly fragmented and undervalued market, obviously being the bowling Canadian market, the group has identified a pipeline of acquisitions, so that's quite interesting. So it looks like they've bought this company and potentially they're looking at other locations to acquire already, as well as new site opportunities, so new locations they're looking to add in, with returns in line with the Hollywood Bowl financial investment criteria, so basically matching what they do here in the UK, and the potential to add up to 10 sites over the next 5 years. So that obviously if you add 10 sites in here, that's going to be a triple of the locations in Canada, which would be great, and obviously they will generate good amounts of profit and revenue over the next 5 years and will be one of the growth drivers for this company coming forward. So yeah, that's really good. And I'm just going to flick to the Discord, which if you want to join, same again, it comes with a patron, but this is the post that I put earlier from a bit of research. So they said that management said that the reason why they want to get into Canada is because the market is currently highly fragmented, with the largest operator owning 17 of the roughly 190 bowling centres. So imagine that there's 190 bowling locations in Canada and the largest operator owns 17%. So there's not really a dominant player in the Canadian area, and this is what Hollywood Bowl are trying to create that brand there, and that's why they probably chose the locations of Canada. Hollywood Bowl sees an opportunity to consolidate the market in a similar fashion to the way it has done in the UK. Teaquinn operates 5 locations and owns a bowling equipment supplier. So you can see here very quickly, if they can get to 17 centres in the next few years, Hollywood Bowl would already become the largest player in Canada. And like I said, it's looking to consolidate that through many bolt-on acquisitions as well. So yeah, it looks like it could be a very ideal location for them to expand it internationally as well. So yeah, I thought this was a really interesting move from Hollywood Bowl. So yeah, we're left here with very good financials, a clear plan of what one of their growth drivers will be in the kind of next few years, and where that leaves the share price at the moment, down at £2.43, is I think very interesting, considering that I already think this stock is quite undervalued, and then you think about the growth potential further down the line as well, and it's also paying a dividend. Yeah, it's fantastic. I'm a big fan of Hollywood Bowl, and I think more than anything, this just leads me, like, it's my 3rd largest UK position. I am up 40% on it, but however, I look at it and going, it's just the complete business, and I am looking at this thinking, I do kind of really need to be buying a few more shares in this one and get that position size up. So this has only increased what I think is a fantastic business that is already undervalued. I think this should easily be a £3 stock and potentially even higher. And then you look at the growth plans going forward, could be really interesting, because if they dominate that Canadian market, like how they've done with the UK, it's going to be very good financials in the next few years as well. So, and also interesting to keep an eye on that B2B platform as well, and what they're going to do with that as well, of course. But yeah, it's definitely interesting. So, good update, really big update, and a good update from Hollywood Bowl. Ultra bullish as always on it, and if anything, kind of just gave me a bit more confidence to buy a few more shares in this one when I can. So don't be too surprised if you see me doing a free stocks I bought video when you see Hollywood Bowl pop up in the next few weeks, is what I'll say on that one. But hope you enjoyed it, and yeah, interesting update. I'm sure you guys that are invested in Hollywood Bowl were interested in this one. So yeah, hope you enjoyed it, and I'll catch you in a bit.